Welcome back to Invest Easy Hub. Today we are diving deep into two hot sectors, banking and insurance. I will show you the reforms, performance, risks, and most importantly, the opportunities for smart money in 2025 and 2026. Now let's look at banking. CBN kept the monetary policy rate at 27.5% in July. High rate equals juicy yield for banks, but also expensive deposit. Now, the big story. Recapitalization by March 31st, 2026. Bank must meet 500 billion naira international, 200 billion naira national, and 50 billion naira regional recapitalization. Now, Access Bank already says it has 500 billion naira. UBA is running rights, issuing right of 157 billion. Now, GT Bank is already listed in the London Stock Exchange, and you know what this means. It means since it has access to other markets, it will help them raise money. If more investors are buying their stocks, this way they'll raise more money. You see. Now, let's look at the NGX Banking Index. As of the time I'm making this video, the Nigeria Banking Index is down 0.53%. That's 7.91 points. With all this being said, watch for capital adequacy ratio, NPL ratio, interest margin, and how each bank plans to raise cash without crushing shareholders. Now, let's take a look at insurance sector in the Nigeria stock market. Insurance just got a big reset. On August 14, 2025, the president signed NIIRA 2025. This means minimum capital for life insurance is 10 billion. For non-life insurance, it's now 15 billion. For composite insurance, we have 25 billion. Then for reinsurance, that's insurance of insurance. Reinsurance are like those company where insurance company themselves subscribe insurance from. They are not like, let me say, this reinsurance company, they are like central banks of insurance company. They don't render services to retail, like to clients like you and I. They render their own services to other insurance company. So you get their own minimum capital requirement now is 35 billion naira. And the Nigeria insurance penetration is still below 1% compared to a 3 to 4% in other emerging markets. This is a huge runway. And if you have been following insurance company closely, which I've been doing, if you have been following my videos, you'll see I've bought some stocks and I've posted some profit that I made from insurance company like my Royalex investments. I bought that stock when it was still trading way below 1 naira, and I made over 250% return in less than 2 months. Now, premium growth is exploding. In Q1 2025, it was up around 63% year on year. And the NGX Insurance Index is up a whopping 69% year to date as of September 4. But as of the time I am making this video, it's up 3.16% only. That's a plus 40.46 points, guys. Now, key things to check in insurance, just the way we've talked about the bank. Check combined ratio under 100%. Check solvency margin. Check their product mix and digital distribution. Now, a quick recap. Banks equal stability plus dividends, but recapitalization is the elephant in the room. Winners will be those who raise money early and keep FX risks under control. And as of the time I'm making this video, a lot of banks have already met up their capital requirements already. Now, insurers equals undervalued growth story. If they survive this NIIRA, they can explode in value as penetration rise, because we are still way below 1%. So by the time they get to around 3 to 4%, like other emerging markets, your money might have grown. You might have made over 10, 15, 20x, and someone might say that's too huge, but it's not. It's very, very possible. So Where should investors look? If you want stability, go for banks. If you want long-term growth and you are willing to stomach risk, insurance might be like your jackpot, because I know this insurance sector in Nigeria is really going to boom couple years from now. So which sector do you prefer? Banks or insurance? Drop your pick in the comments. Don't forget to like and subscribe and turn on notification for more Nigeria stock market deep dives. Thanks for your support.